So in this kind of market, right, you can sell or go away, or if you're in the market, there are two camps, right? One wants to kind of find safety, alternatives to the areas that are getting hit hardest. And then there's the exact opposite, right? Folks who want to buy that weakness. We've got two of the best on both sides of this equation. Gibbs Wealth Management President Aaron Gibbs and Defiance ETF CIO Sylvia Jablonski. Aaron, first and foremost, let me just give you props, right? There was a piece in the Wall Street Journal yesterday, $32 billion poured into financials this year, already breaking annual records, but you were there long before the crowd, so congratulations. Are you still buying, and if so, what do you like?
Yeah, I still have a heavy tilt. And as we're looking at financials, to find value at these days, you really want to go down the market cap spectrum to find those higher growth and undervalued stories. And Synchrony Financial is a great example. It's one of the smaller companies within the S&P 500, but it's a lender, and the outlook for it is just phenomenal. So, but still trading at 12 times forward earnings, so a cheap value.
Yeah. Sylvia, Defiance, of course, you've got some really impressive ETFs. They're all in these sort of hot, futuristic areas. Those are the ones that are under huge pressure here lately. Now, I'm sure you see these dips as buying opportunities. Has anything, though, changed with respect to your micro outlook to your approach?
No, I mean, absolutely great point. I see these as buying opportunities. And, in particular, 5G is a great story. If you think about what we're talking about in Washington and infrastructure spending, the billions of dollars that are going to connect rural to urban America, the semiconductor chip shortage, telecom, all of these things, all of these technologies and different facets that are going to be needed to complete this are sitting in a 5G ETF. So that sector to me is just massively on sale. Some of the top names like NVIDIA, Intel, AMD are likely to start crushing earnings again once the supply sort of comes back into play. So you have the future innovation technology communication story, as well as just the supply and demand story, massive chip shortage, and a lot of these names are going to pop, I think, in the coming year.
By the way, AMD had a nice reversal early in the session. They announced a $4 billion buyback. That always helps. Aaron, I had a few people ask me about, first, what is value versus growth? And for me, I'm wondering, has value gone up so much that it no longer represents the sort of, is it too expensive?
No, value was really underperforming for 5 years, and we were seeing depressed valuations and underperformance for such a long time that just it coming back for the past 3 months, essentially since March, doesn't make it overvalued yet, and it has quite a long run. And when you look at this specific economic scenario of economic growth acceleration, and an accommodative central bank, you usually have the smaller cap, i.e. smaller valued or value stocks outperform for at least a year. So just in this particular scenario, you would expect mega caps, momentum stocks to underperform for a good 12 months and see the value. So we're just at the beginning of this.
What if the Fed becomes unaccommodative, though? I mean, the market's reacting to these FOMC minutes, and I think the part that's shocking a lot of folks is, listen, Powell says we haven't even thought about, thinking about, talking about, but his colleagues are saying, no, we need to talk about this, and we need to talk about it soon. How would that disrupt this whole value thing?
Right. So if lending becomes more expensive, so if we really see that the Fed isn't accommodating and you see loans getting more pricier, that hits your smaller companies. And so the companies that are the mega caps that already have tons of cash tend to outperform. So it is important that we need this economic acceleration with an accommodative bank so that loans and cash flow can still keep going for those smaller companies.